Rex Savage is joining us from Churchill Capital. Always good to talk some deal, and we're going to talk some activism too.
Yeah,
it's good to have you here. Also, Scott Connor, host of Virtual Trade, right across from me, and JB McKenzie back in action on the MOC panel at long last. He got warmed up in MTL, but we're definitely going to talk some crude, maybe some crypto as well with JB. So we'll get there though. I want to talk M&A first, Rex. Philip Morris with a little bit of pop today. They call it a merger of equals, but one's got a big stake in Juul, Altria, and many say that there's a little bit of a different story here as far as equals. I mean, what's going on?
Well, look, 10 years ago, Philip Morris International and Altria were just one company, Philip Morris. They split, obviously, during the sort of U.S. government settlement with the tobacco manufacturers. Philip Morris International obviously basically has all the brands ex-U.S. And now there's a lot of news reports, and the companies have even confirmed that they're at least in talks. I think there's going to be some interesting questions around this deal if it does actually happen. I think the Philip Morris International holders in general might be a little bit unhappy to take on U.S. regulatory risk. Mm-hmm. And the other main issue is Altria, MO, has bought 35% of Juul just recently.
Right.
And is Juul a competitor to IQOS? Will they be forced to divest that stake or not? I think, I've been doing a lot of work on that. I personally think they might be a little bit more likely to be forced to divest that or not. That's going to be something that's going to have to be determined by the government.
They're going to have to divest Juul?
Divest their stake in Juul. They own 35% of Juul.
Yeah.
Juul and IQOS could be viewed as competitors. There's sort of a different mechanism for how the delivery mechanism, if you will, is different.
Yeah.
So it's not clear that would absolutely have to be the case, but if they did have to divest Juul, does that make that as attractive a deal for PM or not?
I mean, I think that was like a big part of it, right? I mean, it's kind of awkward because they're basically being disrupted in a huge way by Juul. I mean, the IQOS, from Philip Morris has been a competitor as well, but the Juul has just taken, of course, the whole generation basically by storm. So if there is a requirement to get rid of that, does the deal break down?
Well, a lot of mergers have situations where they call max or material adverse change clauses, or there's divestiture clauses. So I would imagine if the companies do come to a formal agreement that there will probably be a clause in the deal such that if they are forced by the government to divest Juul in order to close the deal, that they might be able to walk away from the deal at that point.
What's interesting is that Juul is about to have an entire storm of legal problems too. I mean, it seems like it's just a matter of time. Some of them have already started building. We've had a lot of articles lately doing more research about the adverse effects that either exist or we don't know whether or not they exist for e-cigarettes and vaping. So is this a way to possibly make an offer? Essentially these companies, these two big tobacco companies, have a lot of experience dealing with legal oversight. They've got a lot of experience with lobbying. They've got a lot of experience staying alive when people try to shut them down. Does that mean they have a value add for Juul as a business?
Well, it's interesting. I think that a lot of the PMI, Philip Morris International shareholders, probably might not want to take on this risk, frankly. And I think that's why I started out with that. I think there's going to be an interesting dynamic where the PMI shareholders might be subject to a shareholder vote in order to approve the deal as well.
Okay.
Many deals require the target company's shareholders to approve the deal. Usually those are formalities because they're getting a large premium. So of course, most of the time they'll vote yes. There are plenty of exceptions, of course. But some deals also require the buyer, if you will, the purchaser, to put a vote to their shareholders whether they like the deal or not. And there could be some dissension around the PM shareholders as whether they want to subject themselves to potential liabilities like might be coming down the pike for Juul, and certainly U.S. regulatory issues that are extant and well known. Of course, there's lots of clear synergies. They both sell the same brands. IQOS is supposed to be a major growth driver for the combined companies here in the U.S.
It's been struggling though. And
it has been struggling, hasn't gotten traction. In Japan, it is the leader, but in Japan, vaping liquids are banned essentially. So IQOS is the market. But even in Japan, the growth of IQOS has actually plateaued. In fact, it's starting to tick back down.
Wow.
So there's a lot of questions. It's not clear to me, and I think, for example, PM is strong today, a little bit strong today, because
3.5%.
we haven't seen a deal yet. So I think frankly, some shareholders might feel like there's still a chance we might not get a deal, and that would be a very good, sort of short-term outcome for a PM stockholder.
In terms of the stock move, what are we learning about this from how the market has responded to it? Because originally, one popped, one dropped, and it didn't look like that merger of equals that was described. But eventually, yesterday, they both ended down, Scott.
Yeah, oh, absolutely. And I think that's the first indication of how is the market sort of digesting this potential. I don't even look at it as a merger. It's really reuniting two companies coming together. And I think the fact that both those stocks were down, particularly Philip Morris being down the heaviest yesterday, probably not a good indication of how it was received by potential investors. Now, of course, they're both up a little bit today. But I think the bigger picture that people are starting to look at it now is that, okay, this whole market that they're in of smoking, I'll just call it smoking, vaping, cigarettes, everything that's in it, has been in decline. Now, what's the advantage of them coming together? Well, to consolidate, right, and take advantage of scale and things like that. But is that going to be enough to sort of counter the falling market and revenue share? Now, and the question I think investors are going to have is there going to be innovation? Are they going to come up with new products? How are they going to raise revenues? And other than just merging and taking advantage of
That's
scale.
what I think is so interesting about the two coming together and possibly putting the legal work behind Juul, or maybe there's an all-out acquisition that happens, because if that's kind of the last bastion of tobacco products with growth in it, it might be worth every penny to make sure it doesn't get shut down or nixed out of stores or something like that, if that's a real threat. What do you think, JB?
I mean, I think when I look at this, I think to myself, I'm Philip Morris International. I have the growth, right? I've got a huge China footprint, which is the one area that has been thriving, I would argue, anywhere from an international standpoint versus the U.S. So I understand everyone's talking about the Juul and the other components for the vaping piece, but the core business is really only growing there. If I'm Philip Morris International shareholder, I'm going to say to myself, hold on a second here. Why am I putting an anchor on myself, basically, to get into a marketplace where we have some growth over here? And I think that's why you saw a lot of that sort of that sell-off there. I think the bounce you're seeing today is maybe some opportunistic buying at the same time. But at the end of the day, if I'm looking here, I think to Rex's point is this may not go through, because if I'm the Philip Morris International guy, I don't know that I am getting a gain here that really makes us that much better overall from that perspective. I mean, at least for me, that's where I take a step back.
Yeah, and that kind of dovetails into the point that you made, right, Rex, that maybe this is a little bit more complex than we see sort of on the surface?
I think so. If you think about it from an investor standpoint, if you wanted to have U.S. tobacco exposure, you could buy MO in the market.
Right. If
you desire to not have U.S. or have ex-U.S. exposure, you could buy PM. So the companies are really going to need to sell to large investors why the combined company generates enough synergy to take away from that opportunity to invest in them separately that people might choose to, and sort of take away the risk, if you will, or minimize the risk to PM holders that they're taking by adding U.S. regulatory exposure.